I think we're going to end it. I can't tell you for sure. I don't like to say this. We've won this. This war has been won.
इस समय युद्ध की परिस्थितियों में भी भारत की नीति और रणनीति देखकर, भारत का सामर्थ्य देखकर दुनिया के अनेकों देश हैरान हैं।
Geopolitical upheavals have taken their toll on the business sentiments worldwide. The Indian startup space, which had a noteworthy 2025, has felt the tremors in the current financial year. Prominent startups that had their IPOs scheduled early 2026, PhonePe, Reliance Jio, NSE, just to name a few, have shifted their issue dates till market conditions get favourable again. We are at the Tycoon event 2026. I have with me right now Mr. Vikram Gupta, CMD, Ivy Cap Ventures. Hello, sir. Thank you for being with News9.
Thank you.
My question to you is, in the volatile environment that the world is going through right now, there is war, there is the oil crisis, the LPG crisis also emerging in India. The investor scenario, how deeply affected is it, or is it just a blip in India, specifically India, where startups were seeing a big boom till some times ago? IPOs have been shifted right now. So where do you see this going, and how long do you see this lasting?
We are a long-term investor, and venture capital is about long-term investing. And any investor who's investing in private investments always looks at a 5 to 10 year minimum time frame of investment horizon. From that perspective, such opportunities are always seen from the perspective of how do you get good investment opportunities. So I would say that, these situation which is happening because of the Middle East war and other geopolitical scenarios which are happening, I see those are short-term things right now. From India perspective, I think India obviously is already on the rise. We are already seeing the startup ecosystem booming. We've seen the number of startups growing faster than ever. Number of investors are growing. We are seeing the number of funds which are getting registered with the SEBI. That number is mushrooming. And on top of that, we are seeing the government playing very active role with the RDI fund, with the SRI fund, with a lot of other initiatives. So the state governments, Odisha government, Kerala government, Karnataka government, and many other state governments who are actually becoming very active in supporting startups. And I think I would say the real effect of this you will start seeing happening over the next few years. And I would say India will rise much faster as compared to the global markets.
Is this trend that certain IPOs have shifted because of this volatility, or is it just a blip?
I would say it's a short-term blip. Of course, there is going to be a little bit of impact on the macro because of the macro scenario. And that's also fine, obviously because of the tariff situations, any sector which was impacted by tariffs or exports, any global logistic companies, for example, all these will go through some short-term impacts, because obviously if somebody is exporting almost 100% of their products to the US market, and it's their sectors which are maximum hit, they would obviously be impacted a lot. But at the same time, I think we are also seeing other markets opening up. So stock market, while you would have seen a blip happening, you're also seeing the market recovering very well. So if you see how the market is coming back, it's already signs of resilience of the market, so which is a great thing to see.
As things stand, India faces a significant innovation lag in its industrial sector, ranking 39th in global innovation despite being the fourth largest economy. Key factors include a low research and development spending, which stands at 0.65% of the GDP, which is amongst the lowest for emerging economies. Furthermore, the private sector in India has till recently preferred the service model over deep tech, which has a higher risk associated with it.
See, we all understand that the India is spending just 0.6 to 0.67% of our GDP for the development of science and technology or the research and innovation part. This gap is because the contribution from the private sector is very less, which as compared to the developed countries, it is approximate only 35%. So government understand until unless the private sector will not contribute in the development of research and innovation, it will be really difficult to match the speed. To boost this innovation, government has recently launched the Research Development and Innovation Fund, which is a 1 lakh crore corpus, and every year it is embarked the 20,000 crores for the next 6 years. This fund is basically to invest in the private sector to boost the innovation in the deep tech technologies. So this is purely innovative project and very ambitious project of the government of India, and with this initiative we are hoping there will be a large contribution from the private sectors also, and it will give a really boost for the development of cutting edge technologies to contribute in the Viksit Bharat mission.
Research, especially in deep tech, is a high investment space. The government of India has recognized this, and steps are being taken to boost this sector, which is imperative for industry to compete globally in the fast changing times we live in.
So allow me to split it into two parts, right? One kind of research is what we call deep science research. The other is deep tech research. I think it's important to understand that without deep science, there is no deep tech. If you look at the United States, they have a National Science Foundation to fund fundamental science and then early applied science, use-inspired science, and then that has laid the framework for more Nobel Prizes to happen, all of that. And then it also supports translation of that into the industry, and then out of that came Google, out of that came say the CRISPR technologies, out of that came many other technologies like Moderna's mRNA and other sorts of things. So it's important to say that we have to think very differently when we're doing broad-based science, but there we have to say do more ambitious science, more impactful science, more science that is driven and oriented towards impact. That impact could be scientific impact, it could be use-inspired impact and societal impact and so on. So that's so it's a very different way of managing that portion. And then once that is done, that's a more broad ecosystem. And then you can have a more directed approach for saying, okay, now I want to move something from TRL2 to TRL5, TRL6, get it to mid TRLs, and then how fast you can do the delta TRL, right? So that could be an example of a measure. But that delta TRL only makes sense for mission mode programs and so on, or a translation, then you say how much has translated and so on. So you can have translational focus centers, you can have societal innovation focus centers. So I think it's important to have focus in whatever you do and not have confused objectives. So when you're doing basic science, you have to support it as basic science, but you have to ask them to do more, dil mange more. But when you're trying to do applied science and really translation, you do it in a different way. So I think we will have appropriate metrics. NRF is working on a white paper for all of this, and it will be coming out soon.
Investing in research and development in the next frontier sectors, space tech, LLMs, data science, robotics, quantum computing, is a high cost matter. The returns on these sorts of investments come after staggered periods of time.
When you have cost, it is the cost of taking that bet, doing that project. Okay. However, the revenue model is not going to happen overnight. It's not an immediate, oh, here's a startup, here's an immediate thing. So there's a journey. That's why when we give a grant, we expect the benefits to be accruing to society. It is accruing to an academia partnering with industry and so on. And there's not something new. It happens not just in India, it happens in the US, it happens in Europe and so on. So it is a journey that can be measured as a journey in technology readiness levels. It is a journey that's measured in how many technologies transfer. It is a high risk journey where where many things might fail, but it might reappear in different directions. So that's why it's important when we fund some of these, we do have to have focus, we govern them, we can cut projects in different ways, but then whichever succeeds, those 5-10% of projects that succeed, hopefully they will succeed wildly, right? And then that would be the nature of how we look at the return side of the equation. So it is more like a venture capital investment that way.
The Indian deep tech startup sector that is driving R&D in AI, space tech and robotics numbers 7,282 startups. Of these, 337 are in the process of securing Series A funding. Over and above this, the Indian government approved a 10,000 crore rupees Startup India Fund of Funds 2.0 in February 2026, aimed at boosting early stage deep tech research startups. This second tranche follows the 2016 initiative aimed to foster innovation in AI, aerospace and manufacturing, providing crucial risk capital to support long-term technological breakthrough.
Yeah, look, I think when we are funding as ANRF, we are funding also the pre-startup phase, the university phase and other things through grants and before even a startup is formed. And then there is RDI, which is a program which is a Research Development and Innovation Fund, which is driven towards startups, towards larger projects. So there it is, but it's targeted at deep tech. It is targeted at research, development, and innovation intensive things. So our goal as a funding agency is to do two parts. One is to set this foundation or set up the field for a lot more opportunities to emerge, accelerate those towards materials so that they can be translated, and then provide a fund that can drive the financing of that. But we don't do that directly. We use second level fund managers who can then fund it, right? So now your question about startups and so on, this is a change in mindset of startups. So there's once there's more capital available for the deep tech sector, more startups will emerge to claim that capital. So we believe that it's a combination of factors. Are the startups there already? I think for the first round, we are seeing wonderful applications in our early RDI second level fund managers. So they are seeing a lot more opportunities they can immediately finance. So we are seeing a lot of traction. Now the more interesting question to ask is how much is the startup ability for the next round and so on, right? So our goal is to keep feeding that pipeline so that the pipeline becomes bigger, broader and deeper, right? So the answer is India has a lot of talent. There is wonderful opportunities and applicants to our first round, and we expect that it will continue in the future.
India needs to move really fast to catch up and keep pace with the developments in the first world economies when it comes to high technology sectors. The big question is the investment and other measures initiated by the government enough?
With such kind of initiatives, definitely we may match this speed very soon. It's hard to say in years or months, but now everyone understand their responsibility, the government and the private sector also. And now at this moment, India is top 3 in the startup culture. Now we have more than 2 lakh startup in the country, and most of them are working in deep tech. So with these kind of initiatives like RDI fund, very soon India will become a leader or will be in the line of leaders in developing the emerging technologies.
Look, it's very hard to put a number on any one thing, right? So the only thing I will say is that there has to be persistent investment. There has to be investment that is focused more on outcomes, impact, returns and so on, right? So the way we do our investment is far more important than the level of investment. Today, if you ask, the level is low. Yes, it is low, but it's suddenly getting a huge boost thanks to all the things that we're doing in ANRF, RDI and all of that. But then that step function is creating a lot more demand. We have to make sure that investment is done productively, and then that will create the conditions for the next round of investment and so on. Yes, the investment partly is self-financing, and there'll be more crowding in of capital. So and then the levels will automatically rise. I will give you an analogy. If you take an ambassador car engine and then kick it hard and make it go further, pour more petrol into it, it will not be a productive engine. It is better to redesign that engine to make it more like a Jaguar engine or a Tesla engine and so on. So that's what we are trying to do. We are trying to change the ecosystem to behave more like a high productive, highly efficient engine of research and things. So that's our goal, to drive a fundamental transformation of the ecosystem, and then yes, it can then absorb more capital. It is not how much capital is there, but can that capital be absorbed, can it be productively converted to impact. The long-term game. When the United States started National Science Foundation, it had a 75-year vision, and now they are there. But we are trying to. We have a Viksit Bharat vision that is over this thing. So it's not important that tomorrow or day after tomorrow. That is less important whether I'm able to compete or not. But we want to make sure that we create institutional conditions and the ecosystem conditions so that our entire ecosystem can fire. That is far more important, and so on. So yeah, the results on a short term might fluctuate, but our direction and our commitment and our persistence will be there for the long term.
Deep tech requires long-term investment commitments, and that too in high volumes. It is the Indian family offices that are increasingly investing in deep tech, driven by the need for patient capital in sectors like AI, aerospace, defense, and climate tech. As traditional venture capital funding fluctuates, these offices are stepping in to provide long-term funding for research and development intensive ventures.
While the concept of family office is not new to the world, it looks very new to India, but it's more and more relevant for India because India is a land of entrepreneurs where we have entrepreneurs owning large businesses. And the purpose of the family office is not just to manage the wealth that they have created over time. The purpose of family office is also to make sure that this wealth is passed on from one generation to another in the rightful manner. There are certain issues that every family has to manage those issues, to make sure that there is proper tax planning in what the wealth is created is managed, to grow this wealth, to preserve this wealth, and to make sure that it is passed on to the right hands at the right times. So family office as a concept has a lot of aspects to it. And it is very important. It may be a small family or it may be a multi-billion-dollar family. Every family requires this. The relevance to large families is much more because the quantum of wealth there to be managed is much higher, and that is why they need a professional who can manage the whole family office.
There are over 300 family offices in India managing roughly $30 billion in assets, a number expected to grow rapidly alongside rising ultra-high net worth families. The number of family offices has grown from just 45 in the year 2018 to nearly 300 in 2024, driven by a projected 1.3 trillion in intergenerational wealth transfer. These entities provide comprehensive wealth management, succession planning, and investment services to wealthy families, with a strong increasing focus on startup, venture capital, and private equity investments.
Both are allocating money. The difference here is that from a family office point of view, we can invest in three kinds of businesses, if I can broadly categorize. One is a financial investment where you are investing a small amount of money for a certain amount of time period, and you know that this is a risk involved in this and this is the kind of return I will get in a couple of years' time. The other aspect is the investments that we make which are strategic in nature to the current business of the family. So whether it is in FMCG or technology or whichever segment, there are certain strategic M&As that happen through the family office. That is the second part. The third part are businesses that are near and dear to the promoters, the principals of the family, but they don't have the time and the bandwidth to do that. So they invest in startups which have the time and bandwidth to do that, and then they support with it capital and also with the experience that they bring of running businesses over so many generations.
In terms of risk appetite for the next frontier sectors, family offices may leave traditional venture capitalists behind in the times to come. Or would they, considering that their core focus would be on their traditional businesses? Being future focused may be the differentiator in these decisions.
I think family offices will not have that kind of bandwidth to completely start these new ventures because these require a lot of domain knowledge. they require a lot of support from the governments. A lot of them in space tech and all requires a lot of government support. A lot of these businesses which are high in technology require a lot of skilled manpower, which is not the manpower that is working in the current businesses for so many years. So you will require a different set of people. The benefit that family offices have is that now they can give an additional wealth and take that additional risk and be part of this new age deep science, space tech, AI kind of platforms and companies that are coming.
The question is, how many Indian traditional family businesses would go towards new age sectors like deep tech, quantum computing, space tech and microchip technologies, just to name a few?
Yes, absolutely. There is always an additional risk capital that every family has, and they are investing from that into these ventures because there is a high mortality rate also in these new ventures. So depending on the risk appetite that the family offices have, they are taking that risk and they are also reaping the rewards.